We're going to be talking with Alex Moazed, who is the CEO of Applico, Kara Marciscano, senior analyst at WisdomTree. Alex and I have been working together for a few years now. We've licensed some data from his firm, identifying platform companies. Alex, when platforms are in the news, it's always good to get your pulse on what's going on. Welcome back to Behind the Markets.
Thanks for having me.
Tell us a little bit. We've talked a lot about platform companies with you. They're sort of prime and center of the political regime, what's going on, some of the actions taken by Twitter and some of the others. What's your current read on the dynamics of these platform social media companies?
I think that, this is really nothing new. We've seen these tech monopolies wield their censorship stick for months, if not years. I think they have realized that they've gone too far. For some, this is a bigger strategic misstep than others, notably Twitter. Twitter is by no means monopoly status. And I think if you saw Jack Dorsey's note just recently, he is basically recognizing that they went too far, and I'm sure he's already seeing their engagement numbers fall off a cliff. For the larger tech monopolies, their stock prices are pretty much unchanged. I think short to midterm, this isn't a material impact on them. But I think longer term, this actually could enable up-and-coming social media and content platform competitors to the likes of Facebook, Google, and others, which could actually make an impact on them. Not in the immediate term, but mid to long term, very different story.
Yeah, there's all the buzz about Parler, who got shut down by hosting their stuff on the Amazon web servers. Who do you see a rival to Twitter over time? Who do you think can emerge there?
So there are, Parler included, there are 5 top 1,000 websites in the United States today, before all of this madness happened over the past couple of weeks. Parler is one of them. There are 4 others. Alternative content and social media platform startups, which, by the way, many of them have already had their apps banned. So they purely have website traffic. They've raised no more than a few $1 million each of them, yet they have top 1,000 websites in the United States. And by wielding this censorship stick too aggressively, which now you're actually seeing, I think, collectively the whole bunch of them recognize that they went too far, they have enabled a huge surge of audience to shift away to these 5 up-and-coming smaller competitors. And that's the strategic misstep. Twitter is much more in the crosshairs because they only have 30 million actively engaged users in the United States. They are a fraction of the size of the other tech monopolies here. So I'm closely watching Twitter's quarterly earnings and what they're going to have to disclose around this, because I think you're going to see very material impact on them in the immediate term.
Thanks, Alex. This is Kara. So it's interesting because the last time we spoke, we were talking about governments controlling platforms, and now the discussion has somewhat shifted, and we're talking about content platforms in some ways controlling government voices. So my question for you is this something, this censorship sort of issue, is it specific to content platforms only, like YouTube, Twitter, and Facebook? Because if you think about, a platform like Uber, if you have, I guess what you would call low quality suppliers, reckless drivers on the platform, you would expect Uber to sort of step in and regulate. Is this something that's specific to just these content providers, where really you think that they should just sit in the middle of the network and facilitate but not regulate?
It's a great question. And universally across all these platform models, whether you're Uber, whether you're Amazon, a content platform, when you reach that monopoly status, you take advantage of your suppliers, what we call producers. That could be content creators, that could be drivers, that could be sellers on Amazon. The platform takes advantage of supply to inch out, whether it's margin, to impose its content or ideological bias on that producer community. And it's not the consumer that gets taken advantage of. And that is the nuance which the regulators have failed to grasp in the United States. The EU is starting to grasp it, but they still have a ways to go. So, frankly, what we've seen is the tech monopolies have wielded the censorship stick too aggressively. The U.S. regulators are powerless to do anything about it. And the stocks are basically unchanged for the tech monopolies. So there really is little risk in the kind of immediate to short term on these tech monopolies. Longer term, I think you can see private enterprise and competition try to level the playing field, at least in the United States. Much more bullish on that than any sort of real regulatory action on these companies.
Yeah, we talked, Alex, last time about the European regulations. Any developments since we last spoke on how Europe's trying to regulate and sort of focusing on that supplier issue compared to some of the issues that the Antitrust Act in the U.S. tried to focus on the big tech stories?
Yeah, I mean, we've seen them trudge along. We've seen Poland, oddly enough, issue basically a law or an edict that if a content platform unfairly censors or kicks off a creator, the Poland government can fine them $2 million on each occasion until that user is reinstated. And they use their prior precedent of free speech laws, which there's a bunch of precedent around, to say, unless someone is violating our standard for free speech in Poland, if you unfairly kick them off, then we can fine you $2 million per instance. So the EU as a whole is much farther away from following Poland's lead, but I do think it is a really great example of exactly this topic. Platforms taking advantage of producers, in Poland's case, content creators, but it applies to Uber and it applies to Amazon with third-party sellers. That's what Ms. Vestager, the head of the EU Regulatory Council, is very focused on Amazon and how they take advantage of third-party sellers for this same universal concept. But I still think there's some time before the EU takes material action and really kind of dials this all in.
Let me just reintroduce our guest. We're talking with Alex Moazed, CEO of Applico, which is a platform consulting business. Does a lot of work on consulting companies on platform strategies. We got Kara Marciscano, senior analyst at WisdomTree. I'm Jeremy Schwartz. Alex, we've talked about some of the risks to the big tech platforms. What do you think? Is there any, in terms of things going well for generally some of the platform companies, as you go from and tied to the COVID and reopening? Anything, platforms that you would say are doing particularly well during this environment and look for growth opportunities going forward?
Yeah, I mean, we're talking a lot about, the big four here: Google, Apple, Facebook, Amazon, Twitter, a much smaller, fifth. But when you look at the past IPOs of the 6 months, there are a bunch of these $20 to $50 billion market cap platform IPOs or now direct listings. And I think, if you look maybe, the last month or so in 2020, performance was strong per usual, but the FAMGO was actually somewhat flat. And a lot of that growth came from these kind of mid-sized platform stocks who just were having huge growth streaks. The more recent IPOs, they're not in the index, obviously, yet. But, yeah, these mid-sized platform players, $20 to $50 billion market cap, they've got huge growth in front of them. COVID in many ways is an accelerant. And so that's really where you've seen the past month or two here. You've seen a lot of upside coming from them, and I think there's a lot more ahead for them.
Kara, anything where you want to go on the conversation here with Alex?
Yeah, shifting topics a little bit, we saw over the past couple of weeks the executive order from President Trump come out, basically deterring money managers from investing in companies that are backed by the Chinese military. And we thought some of the Chinese tech giants and platforms like Alibaba, Baidu, Tencent would also be banned, but it seems like for now they will avoid it. Just wanted to get your thoughts more generally on the impact that has on U.S. platforms and Chinese platforms alike.
Yeah, I mean, where's Jack Ma? I think the Chinese tech monopolies, I think WisdomTree had a lot of great foresight there in limiting exposure to that many months ago. And I think you're seeing, not just from the United States, but you're starting to see it in other countries too, a wholesale sea change conceptual treatment to how do you treat Chinese tech monopolies. And you got to keep them far abreast from what you're doing, right? The moment the data goes into the platform, it gets piped right back to the PRC and the CCP. And I think there is now an abundant amount of evidence and proof that that is exactly the case. So the world is starting to wake up here, and ultimately that benefits, U.S. and other non-Chinese platform companies and tech companies. When you look at the larger cap platform stocks here, a lot of their growth is coming internationally, right? Southeast Asia, India, Europe. So that's really where these very large cap tech stocks, whether they're U.S. or Chinese, that's where the battle is over growth. And so any action by the U.S. or other companies outside of China to limit the expanse of these Chinese tech monopolies is ultimately a boon to the others that can help fill that void. So I think you're going to see more of this, not less.
That's interesting. I mean, is there any countries besides China? We say is I often say like, where do you get the big tech companies that can rival U.S.? It's really only China. But do you see any other interesting places where platform companies are starting to develop, or any other places outside the U.S. where there's some of these big growth opportunities ahead?
I mean, Europe has maybe 15% composition in the index today. Europe, for a number of reasons, that has obviously been a laggard in terms of tech innovation, but there are certainly bright spots to what they're doing. India, I think, is very interesting when you look at what they're doing from a tech protectionism standpoint, which absolutely helped the Chinese tech community over the past 20, 30 years. How do you insulate some of those foreign tech monopolies from taking advantage of your small but growing local tech community? India actually has, India was the first to ban the Chinese apps, and they've actually continued to ban even more than the original 50 that they banned. And they've taken a lot of interesting policy standpoints to help provide some, through policy, competitive advantages to local homegrown Indian tech and platform companies. So I think there's a lot of really interesting things coming out of there, both from an innovation and a policy standpoint.
Yeah, we talk a lot about India as being at the forefront of some of the tech trends, even just how they sort of put everybody to get a sort of digital ID and sort of being able to open bank accounts with like your biometrics. I mean, they're sort of at the forefront, but I don't know if that there's a lot of the companies that are quite public that you can invest in yet. Is that fair in your view?
Not yet. And you've seen some M&A. Actually, you've seen a good amount of kind of foreign M&A, again, larger U.S. or now admittedly less Chinese companies, but buying some of the up-and-coming tech startups in India, that some of the policy has been used there to help prevent that or, provide the Indian companies more latitude to continue to grow independently. So, yes, it's not as much from a public standpoint that Europe is, but I think over the next 5-10 years that story will change.
So Alex, we talked country exposure, and this M&A discussion is a good segue. You guys published this awesome comprehensive tech M&A report for 2020, and you're calling out a big opportunity to invest in early stage startups. And one of the interesting points that I think you guys called out is that food tech was such a popular industry vertical for raising capital in 2020. Where do you see the biggest opportunity, either for private capital or just platforms in general, in terms of industry and industry vertical and size exposures for 2021?
Yeah, so it was really interesting. You actually saw overall an increase in dollars invested into private startups in the United States over 2020. Almost doesn't make sense. The reason behind that is there's actually a flight to safety. Safety in startup investing is kind of an oxymoron, but there's a flight to safety in the sense that dollars were going to later stage tech startups. So overall volume up, number of deals invested in down. So you had a fewer number of deals closed with overall dollars increasing. Investors were pouring money into later stage startups. And that has created a massive gap for early stage tech startups, particularly in food and many other industries that have, been hard hit by COVID and the fallout from this just huge behavior change, which presents a lot of interesting opportunities, whether you're a private investor, whether you are an enterprise that's looking to engage in some startup M&A. There are some amazing early stage startups that have great, have or had great traction, have really good product and tech capabilities, but just the fundraising environment is not there for them, given this flight to later stage and kind of more stable tech investments.
One of the other industry verticals you guys follow in this is sort of gaming. I know my kids have been on a platform that's sort of looking at maybe direct listing here, the Roblox gaming I think they used to become like platforms in gaming where, all sorts of developers come onto that. Is that a trend you're seeing within gaming, that you get a bunch of these new platform companies developing in that ecosystem?
Yeah, there's amazing stuff going on in gaming, as the video game nerd inside of me ekes out here. But in Q4, Roblox was absolutely my favorite IPO that was slated. They delayed the IPO and basically 4x the price of their company in about 2 months here. And it looks like they're coming up on a direct listing shortly here. It's an extremely strong company, and there's others in the space as well, but they're just throwing off cash and have insane growth. The company was founded in 2004, and basically for the first 8 to 10 years was just kind of slowly building and building a very avid base of users. And the past 8 to 10 years has just been gangbuster growth year over year. I think maybe 4 or 5xing GMV in the past year. And we don't even know the latest numbers yet. So that's an amazing company at a $30 billion valuation, which I think is where their raise just was for another $500 million roughly. I mean, that still could be interesting to take a look at, but I'd want to see where the latest numbers are.
Yeah, somebody who has kids with a lot of direct experience on that platform, I know I could see where it's coming from. The kids, they live there. Any final, as you think about other topics on platforms, any other things that we haven't covered that are very topical for you?
I think we're seeing the thesis prove itself that amongst just tech companies, there's a lot of different business models. But this platform business model has proven itself time and time again to just be the strongest, the most resilient, and bouncing back the fastest. If we look at kind of a year in review here for 2020, and that's the thesis all along from a conceptual standpoint, and I think the numbers have really backed that up.
Well, it's always a pleasure catching up. We've been talking with Alex Moazed, CEO of Applico, Kara Marciscano, Senior Analyst at WisdomTree. I'm Jeremy Schwartz. You're listening to Behind the Markets. We had Kara Marciscano, Senior Analyst at WisdomTree. I'm Jeremy Schwartz. Thanks to our producer, Patty Hall, our sound engineer, Dion Simpkins. You can listen to us on our Behind the Markets podcast every week. Have a great week, everybody.
Thanks for listening to the Behind the Markets podcast. If you want to learn more about WisdomTree, visit wisdomtree.com. You can also follow me on Twitter at Jeremy D. Schwartz. I'd like to thank Patty Hall for producing our live program on SiriusXM channel 132 and our podcast producer, Daniel Bruno. Join us next week for another edition of the show.